Here we are, ladies and gentlemen. You know firsthand, I was very excited about this week of earnings. All right, um, because the big retailers are reporting. We love to look at the retail earnings. Definitely an industry, obviously, I'm involved in, and I like to see how the industry's doing as a whole. But you like to see some of these companies. I have a lot of exposure to retail in my portfolio, and it's good to see what these companies are doing. We're gonna start on talking about. That's right, none other than Walmart. The king of the brick and mortar retailers. Um, so we'll get into it. They reported pre-market, so a little bit late, but you know what? Some of us have to work for a living, okay? But so far, you can see the result of the earnings report, up 2% today, in a time in which the market was relatively flat. So good to see that kind of performance out of them. We always put into perspective what the last year has looked like for the stock. The stock is up 13% over a year's period. In my opinion, criminally undervalued as far as like that 1 year period is concerned. The movement in the last year it's been criminally low. I mean, you look at the retail industry as a whole, and you see nothing but incredible growth last year, and the stock valuation never saw that, unfortunately. So we'll look at these earnings and see what's happening. Obviously, analysts, I talked about in my video, analysts were expecting a revenue decline year over year. And I can just tell you, I told in that video too, I know from 100% personal experience, there's not a shot of that, right? They're not going to be declining year over year because retail demand has actually stayed consistent. Sorry, there's a dog hair in my mouth or something. And you know what? I haven't seen a dog today at all. So you question if that's actually a dog hair. But retail sales have stayed not only consistent in terms of demand, but now the availability of product is there. Products are available for purchase, actually, where last year you didn't. You didn't have any toilet paper. You didn't have any paper towels. You ran out of meat. You ran out of chicken. You ran out of all of it. Meat is chicken. I get it. I was just making an example, okay? But the product availability wasn't there last year, and it is here this year. So that's where you're going to see the sales increase. Even if you see a slight decline in overall traffic, you're going to see an increase because of that. So just consider that. Availability, it's the win this year. So let's take a look. Overall, non-GAAP EPS of $1.69 beats by 48 cents, and a GAAP EPS of 97 cents misses by 26 cents. I'm kind of surprised on that GAAP EPS line that they weren't able to hit in their profitability expectations. Pretty disappointed, all things considered. I think they could have done a lot better than that, but it's not too bad in the grand scheme of things for me. What shocks me here, it really doesn't. I told you low single-digit growth in revenue. Ladies and gentlemen, I mean, am I going down for insider trading? I don't think I am, but because I really am not. I didn't tell you anything. All I'm telling you here is I predicted this, and it's a line that I told you. You can look back at the video. You can doubt me all you want, but the haters, you got to understand. I got this thing. I got this on lock and key, baby. Don't know if that makes sense. Revenue of $138.3 billion, up 2.7% year over year. Lower single digit. Beats by 6 freaking billion. Huge beat. That's a big old beat right there. Walmart U.S. comp sales of up 6% versus a consensus of 0.9. Sam's Club excluding fuel 7.2 versus a consensus of 1.2. So obviously as a whole, retail doing a lot better than expected. But you see warehouses, as I mentioned there too. Like Costco, they're performing. They're outperforming retail right now. But Walmart up 6% is massive. I mean, a 6% comp is, I don't know how that's feasible. Again, I told you it's product availability, but I mean, good grief. E-commerce grew 37% with strong results along all channels. As far as Outlook, we love Outlook, okay? Let's see if we can zoom this bad boy in for you, because I know you want to see it. Overall, they gave an updated guidance, baby. Whew. So for the full year, they're expecting a decline in constant currency. Now they're expecting a decline in low single digits. Overall, comp sales growth, they're expecting no change in guidance. So still going to be up low single digits. And Sam's Club up low single digits as well. International, previously expected a decline. Now they give a more firm estimate, declined 20 to 25% due to divestitures. I think I believe that's selling in the Asda franchise that they own. Asda, I believe that's going to be where that divestiture that they're speaking of is, and obviously that's including divestitures. But it's an increase if you exclude the divestitures, is what they're saying. So pretty nice. Consolidated earnings leverage. Oh, that's cool. We care about obviously operating income. Operating income is supposed to increase slightly. Now they've got an estimate of high single digits. So we're talking 7 to 8%. Tax rate, no change expected. EPS increased by high single digits. It wasn't expected to decrease slightly. Now they've expected a, if you exclude divestitures, increase by low double digits. Hey, ladies and gentlemen, that's good guidance. What can I say? That's pretty darn good guidance. For the full year, or for Q2, they're expecting comp sales to be up low single digits. Nice to see that. I'd like to see what that has for us. So overall, real nice. We'll look at some of the finer details in life. That's zoomed in, baby. I know you like that. I should keep it zoomed in for you. Whew. Would be nice of me, but maybe a little too much. The retail giant reports e-commerce sales 37% up. That's right, baby. Gross profit increased 104 basis points on the quarter. Consolidated operating income was up 32.3%. Sam's Club stood out during the quarter with 7.2 comp sales growth and membership income of 12.7% growth. Nice to see that. Total member count reached an all-time high in Q1. I told you these warehouses, they're doing numbers. People are really into buying bulk lately, as they're storing up things. I mean, people are buying a lot of bulk, so not shocked at all. Obviously, for the full year, EPS increasing a high single digit in comparison to the prior guidance of decline. We love that. Earnings, you see this young lady right here, all masked up with her yellow glasses. She's just buying some freaking bell peppers, okay? She wants to buy some bell peppers. Now she's leading the charge at Walmart, apparently. She's the main gal all of a sudden. Yeah. Walmart comp sales grew, 6%, but 16% if you're looking, that's crazy. 2 years out, 16% in 2 years is crazy. That's crazy. A company making this much money, especially when you're mostly brick and mortar. Golly. Yeah, that's pretty nice. Gains market share in grocery. Pretty nice. So overall total revenue, we saw these numbers. Great numbers here. Great numbers. We saw the expecteds here. Let's look at the full. That's right, the full earnings report. It's what we want to see. It's what we want to see. E-commerce sales for the Sam's Club side grew 47%. Just really mentioning some of the important parts around here that you might need to know, because you never know. Nothing super crazy here. Obviously, we see the same data as we've seen. Operating income up 32%. Pretty significant. I like that. From Walmart U.S. standpoint, we love looking at this data. Transactions saw a 3.2% decline. Oh, okay then. Yet we still see growth there because average ticket grew 9.5. So overall, still less overall traffic, but we're gonna see an increase in overall average ticket. Pretty nice to see there. Walmart International net sales, we saw that. We want to look at the Sam's Club numbers here. Transactions actually increased 2.2, and average ticket also increased 4.9. So both up there, both metrics up there. You like to see it, and operating income also saw an increase as well. We saw the guidance. We love to do it. But we want to look at one thing. It's called the freaking balance sheet, baby. We love a balance sheet. Get me back to this balance sheet. Don't think you can hide it from me. There it is. It thought it could hide. It can't. I'll be looking at the year-over-year comparison, the April 30th to the April 30th. How about that? I love year-over-year. You know I do. Total current assets right now sitting at 67. Am I okay? 76.5 billion compared to 63.3. Increase in the cash position, no doubt. Good growth there, as well as in the inventory. Overall, see some increase in inventory. They need to start selling that, baby. If they send that out to these places, if you've been in a Walmart lately, they're not stocking anything. If they stock this stuff, people are going to buy the freaking heck out of it. Total assets in general at 236 compared to 232. Again, the most of that growth there is because of overall cash and cash position increasing. Liabilities, short-term liabilities or current liabilities coming in at 80.8 billion compared to 82.6. So a decrease overall there is nice to see because they increased the asset position. So pretty good, all things considered, because you're seeing a good increase in stockholder equity, 84 billion compared to 74 billion. For a retailer, this is a pretty nice balance sheet. I can't lie to you. And I'll say it till the day I die. Okay, I believe this stock is criminally undervalued right now. I think it is. You talk about the growth in e-commerce. You talk about still growing out of a pandemic year, still showing growth year over year. This is a company that grew by, $20 billion last year. I mean, this is billions of dollars growing year over year. Yet it's a stock that trades at a market cap of less than $400 billion right now, probably sitting right at $400 billion. But in a year, they're bringing in nearly $500 billion. Am I the only one that sees that crazy? I mean, they're bringing in $500 billion in a year, trading a market cap less than that, and a P/E ratio under 30 when the general market's trading over 35. I think this stock's criminally underrated, criminally undervalued right now. It's one that it's the largest position in my portfolio for a reason, and it's gonna stay that way, ladies and gentlemen. It's pretty nice. That's what I got for you today. Hope you enjoyed.